Alright everyone, here we are with ticker symbol HYLN, Hyliion Holdings Corp. And before we jump into this chart, I want to say welcome to the first time viewers and investors to the channel. Welcome to Invest for Tomorrow, and to all subscribers, welcome back. So let's jump into this chart, and I want to apologize to all viewers and investors that I was not able to do an update on this yesterday. I kind of drew the lines where the resistance level was and support from yesterday, but this has actually broken through support. It's hit newer lows and been very volatile in the last couple of days. You can kind of see it up and down like a roller coaster, and that is not a good sign because of the fact that every time it bounces back up, it's falling right back down just as fast, and it's kind of just holding itself up slightly from the $15-16 mark in a sideways movement. If you kind of look at it and you were to kind of zoom out and kind of see, it's kind of just holding itself up from these lows here, which was the previous support level the day before on the 22nd leading into the 23rd, which was 1674. But it's having trouble pulling itself up upwards, and I think that's a sign of this kind of having a little bit of a stagnant approach, either sideways or it could fall to newer lows in the near term. So we need to watch it very carefully, especially in bearish territory. So the highest point reached recently was 1904. I'd write that down and keep that in mind. But man, that's like almost the highest point before the fall. It was down here at 1894 from 1904, and from that point forward just started to fall. So let's look at our new support here based off the chart, and we're gonna use our 50-day moving average actually as our resistance, and the next resistance after that would basically be the highest point before the fall. So let's just go ahead and put this up here. This is a very, very broad stretch. If we look at it, super broad due to the fact of the volatility and the downward movement. But our first resistance level is actually the 50-day moving average at 1769. I'd keep that in mind. 1769, very important to be turned into a support, and the bulls pull away from it to reach newer highs. That is probably one of the most important points for the bulls to break through, to reach newer resistance levels and newer highs. Now, once they accomplish that, obviously everything here, they'll probably form new resistance levels and new support levels with the volatility of the market moving up or down or upwards. But this is the most important resistance level right now, 1894. Anything before that is good to lead towards this, but this is the most important resistance level for this to reach newer highs and new resistance levels and get closer to that peak of 1904. So 1894 is probably the most important point before the fall, and the most important resistance level that the bulls need to turn into a support so they can pull further away from the 50-day moving average. Now, our support level is down here at 1702. If that gets broken through, obviously yesterday's support down here at 1674, 1675, give or take, is the most important support level before this gets even deeper into bearish territory and closer to the $15 mark. But before worrying about anything below that point, you want to pay close attention to 1702, how quickly it's moving down to newer levels. Then you have that next point down here at 1675, 74, give or take, to kind of have a point of reference how the bulls are reacting before this continues to go lower, or are the bears just tearing it down within that space and in that area. But you're going to want to watch this carefully, like super, super carefully, on the fact that this could be moving down pretty fast, as we already saw, and pulling further away from the 50-day moving average. It's going to be super, super important. This is a very, very broad stretch. I think the first step for the bulls, before even thinking about any other resistance levels up here, because there are a few you could use before this point, but it's just breaking through 1769 and pulling away from it as far as they can, and then we would have to analyze the chart from there. But this is the most important resistance level. The bears, they're dominating right now. And I just want to advise every single investor that 1702 it gets broken through, we're just getting deeper into bearish territory and pulling further away from the 50-day moving average. So my advice is pay very close attention to how the stock is reacting and how quickly is it moving down, or are the bulls trying to bring it back up. As always, if you found this video helpful and informative, please do so and subscribe. Don't forget to click on the bell to turn on all notifications and not miss a single video that I post. Share this with your friends and community. And don't forget to hit the like button to let me know you watched this video. Thank you guys so much for watching, and let's make some money. At the end of this video, there's going to be a pop-up video. And in that video, I will be discussing about the S&P 500 index and how it's been rising several points on scheduled dates. As you see here on the graph, these circles are the dates that the pumps have happened. And I use them as examples to show you guys how much the stocks have risen. And the S&P 500 index rose on those dates. And the reason why it's rising is due to the fact that the Federal Reserve is pumping the markets. On these dates, the charts and the dates speak for themselves, as we can see it here. And I break it down into more detail in the video. But just to summarize it, on these dates, the S&P 500 rises, and there's individual ticker symbols rising up with it. Anywhere from 30 cents to $3 per share. I know it may not seem like a lot, but per share that does add up, and these individual ticker symbols are giving you back profits. These are profits, and like I always say, profits are profits. Whether it's $1 put into the market and you get back $2, you've put in an initial investment and you got back more than what you started with. That's what it's all about. And also in the video, I go into further detail showing you guys these dates and showing you how much it rose. Like, for example, this was one of the last pump dates, and the lowest point that it reached was down here at 35.11, and the highest point reached was 35.57. That's like a 40-point jump. And here we're seeing the same thing. It went down to 35.88, and it rose up to about, I'd say, let's see, this is all still in the same day. It rose up to about a total amount of 36.23. When you do the math, that's almost a 40 to 50 point jump, and there's individual ticker symbols rising up with this. Now, I'm not there to guarantee you profits. I'm not there to tell you to buy, sell, or hold anything in particular. I'm just here to inform every single investor on the great news, on the opportunity to maximize profits and minimize losses. You have to do your due diligence and research, but these charts and the dates speak for themselves. I mean, this was probably one of the largest jumps that I've seen in the last couple of pumps, and it was down here at 33.02, and it rose up to about 33.88. That was an 80-point jump. There was probably ticker symbols rising up more than $3 per share on those dates. And even on these dates, there's individual ticker symbols rising more than $3 per share. Check it out, see for yourselves, and my best advice is look for ticker symbols that may be resembling the behavior of the S&P 500 index, and you'll be able to go ahead and give it a shot. Check it out. Again, I'm not there to tell you to buy, sell, or hold anything in particular. I'm not there to guarantee you profits. I'm just here to go ahead and share the information along with every single viewer and investor. The video should be popping up soon. If you haven't seen it already, pop up. There is the link down below in the description. Thank you guys so much for watching, and let's make some money.